Good morning all. Just want to go through the economic calendar for the next 7 days. Dailyeffects.com is pretty good. We got the RBA interest rate tonight, so if we did have any notifications, take that into consideration. We've got the zoo economic sentiment index for Germany and the Eurozone, and we've got FOMC minutes on Wednesday. Ideally, we wouldn't want to trade the dollar around this event. We don't know which way it's going to go. Looking at the bubbles, it looks like it could potentially be a sell, which would agree with the fundamentals. We've got ACB on Thursday, so we've got a very tricky middle of the week, and we've got some UK and Canada data after, but this is going to be pretty intense from a trading perspective. So if we're getting a euro notifications or dollar notifications, which is likely, then we do need to be careful. Just a little macro look, just to say that we're potentially going to snap a 7-day consecutive gains for the S&P. I mean, statistically speaking, that's kind of unusual, to be honest. So it wouldn't be too much of a surprise if we just had like a negative day today. But potentially speaking, we could just continue to rally. At the big picture, we are risk on. Just a little bit of information is that we've got that potential break, the snap of the 7-day trend. You had some pretty bad PMI from China, and it dropped to the lowest in 14 months. And we still got that coronavirus Delta variant in Australia and the rest of the world. And there is a little bit of uncertainty about the Fed and what they're going to do, and so that will shine some light. But we know that they're going to taper. It could potentially shine some more information about like dates. But if you look at the countdown to FOMC, they're not penciling in any interest rate hike this year, and it's going to potentially be 2022, but late. So I think it was actually somewhere around September 22. So they are penciling a fairly good chance of an interest rate here, interest rate hike there. So sort of June. Let's go. Actually, this is moving quite a lot. So it looks like March 2022 is the one. That's the one that's going to be what's everyone's going to focus in there. So until then, it's just wait and see mode. So it's quite frustrating to trade, but we know around here, we know that the dollar's going to get quite a good footing, and it's probably going to go into rally mode. So I just want to talk about the indices. You know that we could potentially see a little risk off today. Looking at the 24-hour change and the macro picture. Now, if we look at the sentiment, just going to grab my screen over. Okay, let's turn it off. So let's look at Germany. Okay, so if this SSI line crosses the 21-day and it continues, then we will sell off. Okay, so we can just be quite. We had like a fairly decent two respects of that line. It's not ideal. Technically, potentially bearish. I think we want this line to cross and then to hold above and to continue in order for this price to come down. But even if it did fall, we'd still be by the dip scenario, because at the big picture we're risk on. So potentially we could be a little bit risk off today, but you'd want to keep an eye on this SSI line. Very, very important that you guys have got access to this. It is absolutely amazing. The FXCM trading station too. So there's Germany. We'll look at S&P there, and so we're on a massive bull run. And so we did actually cross the 21-day. They went long, but it went up anyway, so it's ever so slightly payday for those guys. But look at the percentage. There's 85% of people short, and we want to be avoiding 80%, 20%. So this is overextended on the sentiment. Okay, if we use the Pareto principle, which I recommend that you look at, we can apply this to trading, and especially sentiment. Have a look at this. It's important that you guys understand this because there's an 80 to 20% sort of like a philosophy with finance, and so you can apply it to sentiment and trading as well. And this is why the RSI uses the 80 and 20% and things like that, the stochastics. But we are overdone. We're a little bit too skewy on the sentiment S&P. So really, it should come up here even, and even then it'd still be a buy. So it looks like potentially we could see a little reversal, but I wouldn't put money on it falling because it's so strong. US 30. And yeah, to have a look at this, I'll put this link on the video. Do read it, it's very, very good. Let's go back to this US 30. So there's your buy indication there because we crossed from above and we went below. So at that point, if you'd spotted it and you had this terminal up, then you would have made some good profits. There's 500-point move there, and it's not looking like it's going to cross yet. So this is looking a little bit more bullish than the S&P, which is interesting. And so maybe, well, I guess I've covered DAX, US 30, US 500. The UK 100 isn't that good to show you because I don't think it's that commonly traded. So the sentiment is a little bit funny with the UK 100, but the DAX and S&P and the Dow, they're more commonly traded, so their sentiment's a little bit more accurate. But hopefully you guys understand how this works. So that would have been a buy because we had the cross from above, and then we just rallied. So your stops would always be just below the candle wick. We haven't got visibility of the stop loss clusters, unfortunately, but you knew somehow around there'd be the stops. So you'd enter there. Just be a little bit careful with your stop loss placement. Admittedly, that it would still be quite a horrendous stop, but you know that you're onto a good one because of the sentiment. So I'm going to do crypto and FX now, and yeah, hopefully it helped.